Hello, traders. We hope this past week has provided you with some great opportunity to make a few pips for your pocket. This week, we've got something with a bit of a history, and it's a little bit of an odd one, which we always like to investigate. So sit back, turn up the volume, and enjoy the show. Our initial testing stream was completely off the hook, totally unusable, which is really odd since we've never experienced it before. We ended up going back to our original methodology for this one, that being recording the 1 minute chart for an extended period to get our signals. We'll put on a few seconds of what we were first faced with before the testing analysis begins. So, this week, we're going to take a look at a below chart, two lines cross, confirmation indicator. Its name is the Random Walk Index. We did some extended research into this indicator and discovered that it has roots originating from a French stockbroker's assistant named Jules Reneux. He proposed a hypothesis in financial theory which states that a security's price evolves due to random movement and cannot be predicted. Mr. Reneu's work in random walk theory dates back to 1863. A lot of subsequent work was done from this original idea, and it really took off in the 1950s and continued on for the next few decades. It found a more widespread audience in the 1990s Technical Analysis of Stocks and Commodities magazine. The theory was first converted to an indicator in 1993 by Michael Poulos and finally became an MT4 indicator in 2012 and again updated in 2020, which is the version we're looking at. We're getting a lot of great stuff, and those who are taking a couple of minutes to do the survey on the home page are really helping out as well. So, thank you on both fronts. Keep sending us those glorious gifts to stonehillindicator@gmail.com. We'll start this analysis with a quick clip of what originally happened in the data stream, so you see that not everything is champagne dreams and caviar wishes. Then we'll get to the business at hand. So, ready, steady, get bright-eyed and bushy-tailed. And there you have it. Indicator seizure on a stick. Now, let's go watch something a little more reasonable. One more thing. We opted to change the settings on this indicator. For whatever reason, the coder decided to set the default value to something so short, signals would come fast and furious, so we slowed it down by increasing the length setting. We addressed this in the blog. Anyway, we'll let it run out for a few seconds before pausing for analysis. Here we go. Alrighty then, we'll kick things off with this green over red cross to the long side. Let's watch. We'll take it. Nice smooth ride up. Never mind the jerky signal lines, just concentrate on the crossovers. There is no smoothing function, so what you see is what you get. We're going to fast forward a bit as the trading day finished and the volume was pretty thin. I'm sure you noticed a lot of chop in the market and subsequently a flurry of signals. Your algo probably would have kept you out of them, so we'll resume here now that the market is showing a little more volatility. Our entry would have been that big move down, but that's the natural feedback of price acting on the indicator. You'd still have walked away with some profit. Now, we'll look at the long signal. Wow, that was really a wild ride. Depending on what the ATR was, it would have determined if you'd have bounced out on that first pop to the upside or stayed in through each successive move. Remember, we're looking at the 1 minute time frame, so imagine that this is on the daily chart. Those big candles can carry you a great distance from your entry. Overall, you'd have exited with a profit, as it may have only dropped a handful of pips below your entry price. A quick loss for the journal with a continued chop in the next long. Let's see if this has any legs. All right, another winning long trade. I think we've demonstrated how this indicator works. Remember, the signal lines are very reactive to price, but none of it matters, just look for the two lines to cross. Naturally, increasing the length will slow it down, and of course, we've got testing results to show you how this performed between default values and tweak settings. We'll let it run out for a few more seconds before wrapping up. So, Random walk theory. What did you think? The notion that price moves randomly is definitely up for discussion between those who think it does and those who think otherwise. We really don't care. We just want a trend. Whatever tools we can find to clue us in that a trend is in place is our goal. After all, the trend is your friend, right? For those of you who would like to try this and have a French pastry in honor of Mr. Ragnou, can get it from the Indicator library on the Stonehill Forex website, where you can download it for free and then fool around with it at your leisure. Sorry, we don't have any pastries for takeaway. Nope, no financial advice from these parts. Besides, do you really want to follow the recommendations of those who offer financial advice on a salary? They make their money no matter how badly your portfolio hemorrhages. You can make money in both bull and bear markets all by yourself. Naturally, we can help. Slide on over to the Stonehill Forex website and see what we offer. We have loads of free resources, a sizzling deal with Blueberry Markets for non-US traders, and a landing page for information to get you started. Your journey to self-sufficiency starts with a no-nonsense Forex course created alongside VP, who endorsed us as the only one legally permitted to teach his material. Check out his message for potential students. We also have a short description of each course module on the site, and if you still have questions, shoot us an email. Check out our monthly digest where we discuss up-and-coming projects and other useful items. You can sign up right on the website from any of the blog pages, or just click on the email list tab at the top of the page on our website. If you missed it and would like to see what we're doing, email dan@stonehillforex.com with the title Latest Digest Please in the subject line. You'll have it within 24 hours. We're also on Facebook, answering all kinds of Forex questions on Quora, and of course generating more helpful YouTube videos on our channel. Go to the website and spend some quality time checking out what we're about. Don't forget the survey on our homepage. It only takes 5 minutes or less, and your input is a big help to us. Our only goal is to make you a better trader.